You see what we got right here? We have apartment complexes and they're completely booked. You wanna know why? Check it out. People can't afford this stuff. You see this tiny little brick rambler selling for $350,000? That's like the smallest starter home in that neighborhood right there. And so right now, we have almost no one in this country that can afford the game of real estate. What's happening? Why aren't people going to be able to buy in 2023? And what should you be doing about it if you still want to own real estate?
One shot, now the future is yours. Go!
For most people, it's going to be 100% impossible. What percentage of people aren't going to be able to buy a home? Over 85% with everything I'm about to share with you. It's crazy, but there's good news. I'm also going to show you a strategy that will work for 78% of people, and I'll show you at the very end. Over 1/3 of American households are stuck renting, which is nearly 44 million tenants. 72% of tenants want to own a house, but that dream seems further away than ever before. We've had climbing interest rates for the whole last year. It doesn't look like it's going to stop anytime soon. And bottom line is, with house prices up $150,000, you know that has increased a mortgage by about $1,000. But then rates also shot up. And you know what that did? It made mortgages that much more expensive. That's what's making it nearly impossible unless you understand some of the hacks that I'm going to teach you in today's video. This comes straight from rent.com. The average rent in America is just shy of $2,000 a month as of May. And as rents continue to rise nationwide, it makes saving for a down payment nearly impossible for most people. There's usually a 2-year lag between, prices went up, and rents don't go up commensurately. They go up with time. So they haven't caught up. They're going to continue increasing. And that means even for the next 12 months, people are going to say, oh no, real estate is even more unaffordable to buy, and renting, it's getting that much worse. So check it out. The median home price currently sits right around $425,000. But let's back up 2 years ago. There was a house for sale for $350,000 a month. Its mortgage would have been $1,400 a month. With today's interest rates, it's now $2,400 a month. That means that the exact same house with higher interest rates literally costs $1,000 more a month, 40% more. And don't forget, a mortgage is the number one expense that a person has, just like rent. And when that goes up that much, it means that people end up living relatively check to check. And there's a new stat out fresh as of last month that now we have 62% of Americans living check to check. It's all explainable by the 7% mortgage. Mortgage rates have risen nearly 4% in the last 2 years. That, coupled with rising home prices, means that only 15% of Americans can afford the median priced home. And I want you to think about that. 85% can't qualify for a home based on these two changing dynamics of increased prices, increased rates, and if it's ever going to get normalized again, either prices have to come down or rates are going to have to. So assume for a moment that you wanted to buy a median house, call it $440,000 with today's interest rates. How much money a year would you need to make to be able to buy an average home? To afford a house that costs $440,000 with a down payment of $13,200, you'd need to earn $139,000 per year before tax. Basically $140,000 a year. And that's a problem for the majority of people because we're still stuck in this archaic system of having one stream of income. Either I work for somebody else and I get paid that way. Maybe I'm in a dual income earning household and we have 2 streams of income. I own my own business instead of a job. That's a stream of income. People like me, we've got so many streams of income that this isn't a problem, but it remains a problem for the average person. Now, the good news is there is a hack and there is a way around this, and it may not be the best news for you. You might be watching this video thinking, Kris, how do I afford a home for me and my family? Instead, you should be asking a different question. Part of that American dream is owning a house for you and your family. But in this type of economy, instead of owning a home for your family, you should look at becoming an investor and owning a home for a different reason. Why? Well, if you feel like it's too expensive to own a home for you, if you get yourself on the other side of the fence where you're an investor, you land yourself in a situation where all of a sudden you're making money instead of worrying about losing money. Literally can put yourself on track for making millions of dollars, but that requires a different thought process. Home values recently dropped the most in 11 years, meaning that investors are on the move. Interest rates make buying your home a bad idea, but partnering with an investor has never been a better idea. Everyone is mobilizing for the big investment party. And let me tell you what happened in 2008. The prices dropped kind of like we're seeing right now, and within 5 years, I made my investors over $100 million. I believe that now is the best time for you to consider becoming a real estate investor. And here's what it could mean. Let's say that you want to own a nice home, and instead of worrying about the dynamics of interest rates and raising prices, what if it just didn't matter because you were earning so much money as a real estate investor? Well, check this out. You've been setting money aside for a down payment for your house. Instead, use it as a down payment on an investment property. In fact, when you own investment property and you put a $50,000 down payment, and if you're earning at least 25% a year on your money, guess what happens when that compounds? You buy one house, it goes up in value, you sell it and trade one home for 2 or 3 houses. They go up in value, you trade 2 or 3 homes for 10 homes. And before you know it, over 20 years, you started that original $50,000 and you've now grown it to $4.3 million. That's the power of compounding 25% in the game of real estate. And you know what? This is not news to seasoned investors like me that have transacted over $2 billion worth of real estate. We've been using this for creating wealth for generations, which means it doesn't matter if the market's going up or down. A true expert knows that you can make money in any market. And in this market, we're making a lot more than average. You have a really simple choice in this economy. You can either wait until the market corrects itself to buy your own home, or you can do what I'm doing, buying as much investment grade real estate as possible. Now, doing it on your own might seem a little bit scary, but if you click the link below, you can learn about partnering with me. I take all of my experience with my team of 200 experts and I do 100% of the work. That means you get to be passive. Your job is putting up some money for a down payment, and it can come from a 401k, an IRA, equity in a home, hard-earned savings. Get your money doing something better than the stock market is providing right now, and not by a little. At a 25% annual ROI, when you click the link below, you're gonna see that you can earn 27 times more money than the average stock market 401k, IRA, index fund all combined. So you can either view this real estate market as a toxic environment or an incredible opportunity of growth financially for you and your family. And I'm telling you right now, that's 100% what this is. Click the link below. Learn about partnering with me. Let me show you my track record on thousands of homes and why this economy is your golden opportunity. Real estate investing, how does that mathematically work? If you want a really simple breakdown on how people create millions of dollars of wealth very easily and passively in the game of real estate, I made a video for you. Click right here, watch this. Let me show you the simple math of creating wealth through the game of real estate. It's never been easier.